Banks and fintech companies depend on regulators to clarify the rules of the road so that they can provide financial services without worrying about inadvertently breaking the law. But recently, regulators in the United States have been failing to do this. The most recent example of that is the repeal of the OCC's True Lender Rule, which became effective just last December. Now, fintech lenders and banks are wondering what they're supposed to do in response. So today, I'm going to talk a little bit about the OCC's True Lender Rule, the repeal of that rule, and what fintech lenders and banks should do now in response. In December of last year, the OCC's True Lender Rule took effect. And that rule clarified when a fintech lender could acquire a loan from a bank without being forced to change the terms of that loan. And that was the case because previously it had not been clear when a fintech lender acquiring a loan would be treated as the true lender rather than the bank. And since different rules sometimes applied to the fintech lender than applied to the bank, the fintechs that were buying the loans were concerned that after they bought the loans, they may be forced to change the terms of the loan because they're subject to different rules. So the OCC's clarification was helpful both to the banks and to the fintech lenders. And what that rule said is that the bank, not the fintech company, is the true lender for the loan when the bank is named as a lender in the loan documentation or when it funds the loan. Unfortunately, any banks or fintech companies that relied on the OCC's True Lender Rule are now regretting it, because on June 30th, President Biden signed off on Congress's repeal of the OCC's True Lender Rule. That throws the fintech lending rules back into disarray, and more importantly, it reflects a broad problem with regulation of fintech companies in the United States. First of all, it is a problem to have the rules change every election. It's very difficult for fintech companies and banks to enter into long-term agreements and long-term partnerships to offer products to consumers when those products are subject to regulation and the rules keep changing after every election cycle. Second of all, it reflects a problem that is kind of unique to the United States, which is the 50-state problem. In the United States, different states have different regulations, and the courts in those states often interpret the law in different ways. That's something that had been happening with the true lending rules that were being applied to fintech companies, and we've also seen it in a number of other areas of regulation. Unfortunately, what that does is it distracts both banks and fintech companies from creating great products that consumers want, and instead they have to focus on keeping up on regulatory changes in all of those different 50 states, which is compounded when all of those states are also having elections every few years. So between the state elections and the federal elections, the rules are constantly changing. That's not just bad for lenders. It's also bad for consumers, because consumers often want the products that these fintech lenders are offering. And those products get delayed because of the challenges presented by the regulatory regime. And sometimes those products end up being much more expensive because of the regulatory costs that are paid by the banks and the fintech lenders. Now that we're back in a world in which true lender issues are going to be determined on a case-by-case basis, often with unpredictable outcomes, what should banks and fintech lenders do? Well, first of all, they should take these hurdles as opportunities, because barriers to entry make things more difficult, but those companies that clear them will have a huge competitive advantage. Second of all, it's important to invest in regulatory compliance upfront. It is much more difficult to later change how your lending program works to comply with regulations than it is to ensure that your program will be compliant with regulations upfront. Third, you want to take advantage of today's low interest rates. If you act now, you'll be able to avoid a lot of the problems created by the true lender rules, which relate specifically to the imposition of interest rates. Finally, when possible, you want to get regulatory buy-in. if you can get the regulators who are looking at you and regularly examining you to sign off on a lending program before you implement it, it's much less likely that that regulator is later going to yank the carpet out from under you and prevent you from going forward with your FinTech lending program. So I'm not going to sugarcoat it. The regulatory landscape for FinTech lenders has grown a lot more complex, but this can be an opportunity. And good news, I'm a lawyer. So if you want to discuss your FinTech lending program and how it's impacted by the repeal of the true lender rule, give me a call. I'd be happy to talk to you about it.